Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday. It's May 31st, 2012, and I've got a couple questions, so I've got a couple answers. Somebody's been asking me online on our free website at PerfectStockAlert.com in message form what did I think about today's hammer candlestick formations. You obviously can't see it on the Dow Jones here, but you'll see on the other charts I'm going to show you. Another guy asked me, why don't I have any buy opportunities on individual stocks out there and this and that. I'm concerned with those questions because those questions shouldn't be asked at this point in time. So I thought I would go over in depth the U.S. markets as well as the longer term pictures now that we've seen the end of the month here, and show you why I just wouldn't even consider buying anything in this market. And in fact, I've been looking for sell opportunities, and there's not even a question on the charts as to whether or not that's true or not if you look at both of those time frames. When you're looking at the Dow Jones Industrial Average here, we're looking at the short term at this moment. This is a 3-month chart. Each candlestick represents a single day. You can see that we had this little bit of activity here, kind of a pause and trading activity, and it was intraday. You were seeing a little bit of a hammer candlestick formation, so people were wondering, hey, is this a buy signal? Is this something we should be taking advantage of? The answer to that question is a clearly defined no, and there's no question about that. We talked about this yesterday, telling you this trend here was actually broken when you closed below that. Today's intraday activity simply tested and proved that to be true, as we found resistance where we used to find support. We sold off away from that. Now we're back down here basically to the level we were at before. It doesn't surprise us because we saw this move here as being a false, a bearish setup, basically a negative divergence situation. We had this move to the downside here and a move to the upside here, so it was not being confirmed. You were in fact hearing that the market was telling you this move right here, this counter trend bounce here was unsustainable, would fall apart. Well, what's the logic behind that? Well, the logic is simple. You simply sold off here, attempted a little reversal here for a day, and then sold off some more. Then you bounced here. Now that we find out that this is not going to hold, we knew that. We talked about that some time ago. And we sell off. Now, why do you sell off? Because buyers can't push any higher. Sell pressure is growing. What does that tell you? It tells you that you have to sell off. So you sell off. But do you, at this point, reverse and move higher? No. Why not? Because you know you can't go any higher. You done tried it and failed. So what has to happen is you have to go lower. That's the only way to increase buy pressure and alleviate sell pressure. So that's what's coming. You're starting to move lower. On top of that, we have this previous support, which is now going to be acting as resistance. So any move to the upside would be short-lived, of course, as you would have to go lower. All of this makes perfect sense if you look at the longer term charts. Let's have a moment to do that. Now, the analysis I'm about to do here in the longer term chart can be done with any chart out there, so you can apply it to anyone you'd like. The main thing to know about longer term charts versus shorter term charts is that the longer term chart has more data, of course, making up the chart, and therefore the longer term chart is more important. So if you were to get a sell signal on a longer term chart and a buy signal on a shorter term chart, you're not going to trust the buy signal as much as you would the sell signal on the longer term chart, because again, the longer term chart is more trustworthy. This particular chart does not give us conflicting signals. It's confirmed what I just said about the shorter term chart. It's basically telling you that you have selling off. This here is not a reversal signal. This is a continuation signal to the downside, one of the strongest candlesticks you can find out there. Remember, this is a month's worth of activity, and even in this particular month, you did see a little bit of upside potential right there. You saw a couple of days here and there. You're not going to fall straight down, so you can have a day or two to the upside. That doesn't matter. I wouldn't be a buyer of this with your money, much less mine. The main thing here that I can see is you had this trend move here, then down here, and then a higher one here. What does this tell you? You got a close here, high close here, another one here, showing an uptrend, right? Okay, wrong. This right here, the ultimate oscillator, high point is here, lower high here, telling you that this whole rally that you've seen right here is not sustainable. It's false. It's fake. That means you're going to erase it. That means buying here would be stupid. You actually expect price activity to move down here, test the previous low at least, though you'll probably fall lower. But ultimately, you don't want to be buying now. You want to be selling here, looking for this to continue falling lower. The NASDAQ chart, looking at the 3-month daily candlesticks here, you can see that we do have a hammer candlestick formation right there. And someone's going to be asking, hey, is this a buy signal? No. The reason being, of course, that you have this previous hammer candlestick formation here was actually much more bullish than you have on today's activity. The reason being that you were actually not red, you were white here, clear, hollow. There was more buy pressure in that situation there. You had a run up to this point, failed, and sold off, and now we get a weaker candlestick formation. Do we now expect something different to move to the upside? No. I think you're you're hesitating right here ahead of the news we expect tomorrow on the unemployment front, and no one really expects that to be good, so I expect we'll go lower anyway. And again, we already know that anyway because of the series of situated divergence formation here, where we have the bear setup telling us that this move right here is not sustainable, will fall apart. That means we go back down to this level, and then from that point there we will of course go lower, because that's the only thing you can do to change the direction of the chart. You cannot from this point here get a rally beyond this point. We've already tried it, proven that it's a false logic, and you fall apart. So now, as investors realize this is not going to work out in their favor, they're going to eventually sell stocks, and that's going to drive stocks lower, and it will have to happen in order for you to find a point where buy pressure is increased and sell pressure is decreased. Right now you don't have that. You have sell pressure showing a series of lower highs consistently, and bears are getting very confident, and bulls are just falling apart here, unable to change the direction of the overall trend. Remember, the trend's more important than a particular candlestick formation, so always watch the trend before you start looking at a particular candlestick formation thinking, hey, should I be a buyer? Because again, longer term chart does not tell you to buy. Let's look at the long term. The NASDAQ 2-year chart with each candlestick representing a single month's worth of trading activity, you can see the same signal here, confirming what I've already shown you in the other chart. If one chart were to tell you one thing but not confirmed by the others, then that would be a different story. All we're seeing here is the same signal again and again and again. Actually, one of the charts gives us a twist on it, but it's still basically the same thing. What you have right now, you can see a continuation signal to the downside. You have seen a little bit of intra-period activity to the upside there. That's why you got the wick out of the top, but it's unsustainable. And you get a little wick out of the bottom there. That's normal candlestick formation here. It's one of the strongest candlestick formations you can find. Signals to the downside, especially after a run to the upside. Blah, blah, blah. All we can really see here is we have a move to the upside here, hanging candlestick formation here, hanging man, I'm sorry, here, 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 and here, all of which telling you this market's not moving any higher. Then you get a shooting star signal and you sell off. Then you make a higher high, get another hanging candlestick formation, and you start to sell off again. Main thing here, note this high close here and this high close here, trending up. However, corresponding time periods on the ultimate oscillator indicate that high point here, lower high here, telling us that this rally to the upside is false. It is not sustainable. It will be erased. That means all of this gets erased. We fall back down to this level. Why then would you be a buyer here? You wouldn't. The Russell 2000 Small Cap Index shows the same overall story here. You'd want to be actually selling this guy. We haven't actually marked it on our chart yet, but you will see why in a moment. The main thing here, of course, would be the previous head and shoulders formation. You can't see it all in this chart anymore. We talked about it in the past. There's a first shoulder formation there, the head formation there, the second shoulder formation there. We told you a long time ago to watch this neckline here, because once she closed below it, like she did there, it was then going to be acting as resistance. You saw that the following day here, and then she starts to move lower. Then she makes a move, a counter trend move up to this level again. What does she do at that point? She proves that this previous support is now acting as resistance, and she sells off. Why would you buy here when your upside is here? You wouldn't do that. You know not to do that because you've got this divergence formation right here. It's actually a bear setup telling you that this move right here would be erased. That means you don't buy here looking for a move to here. You sell here looking for a test of the previous low. On top of that, you know that A, you don't have a hammer candlestick formation at this low point here. Therefore, that's not the true bottom. We talked about that in the past. And you know you'll have to go lower anyway because bulls were not able to, there's not enough buy pressure to drive us any higher here. That means that you will have to dive lower to increase buy pressure. That's the only way to motivate buyers, is to offer them a lower price, and so that's what drives markets lower. On top of that, it's the only way to actually get bears to say, you know what, I think she's gone too far, we'll probably get a good bounce, let me pull off some bets here, cover some shorts, and then you have to see a kind of reversal situation. Right now you're not seeing that. You've got a high point here, lower high here, lower high here, lower high here, lower high here. There's no reason to buy this market. You're obviously in a downtrend. We also have a signal telling us that that's going to happen anyway, that we're going to go lower, because you got warned way back here when you closed below the 200-day moving average. That's the first no-no sign if you're a bull. You don't want to see that. And if you're a bear, you do want to see that. So that's what we clearly have here. Let's look at the longer term chart. The Russell 2000 Small Cap Index longer term chart, 2 years, each candlestick represents a single month's worth of activity. Same signals we've seen on all the other charts. Bearish candlestick formation to the downside, continuation signal to the downside. Everything here is exactly identical except one detail. Here you've got a move to the upside. Here hanging man candlestick formation 1, 2, 3, 4, telling you that you're not going any higher here. Then you get the shooting star signal and you sell off, and then you jump up here again. You get another shooting star signal here. here, hanging man, you start to roll over here. Everything here is the same except one detail. This one here is a high point here, a lower high here. She's trending down, and that is confirmed by the Ultimate Oscillator. High point here, lower high here. You're being confirmed that you have peaked in the markets and you are rolling to the downside. That means if you've got a series of lower highs going on, you will at minimum test the low. You will at least fall to this point here to test the previous low point. And you can go lower because that's how you end up with a series of lower highs and lower lows. But the bare minimum on something you shouldn't even argue would be that our next move is down to the lows, and that's clearly defined. So the idea that you would be a buyer here looking for a move here, that doesn't make any sense at all. You'd be looking for a sell opportunity because this guy's got further to fall. The SPX, or the S&P 500 Large Cap Index, is the same overall story as the NASDAQ. You can see that we have actually broken below this support line. We talked about that yesterday, closed below that. Little intraday activity, tested that, found it to be resistance, and we sold off. And where are we going from this point? I've already talked about this repeatedly, but we'll point it out again. You can look at the highest close actually here and trend down there, and you can see the corresponding time period here and here. You can see we're trending up, and that tells you that this move here is false. It's going to fall apart. That means you don't buy here. You look for it to sell off to this point down here again, because all of this has to be erased. Again, you come to the same conclusion. If buyers were unable at this point to drive the price any higher than this, then why would you expect them to do it here? They wouldn't. You expect them to fall lower, and that would be more logical. You would expect that to happen because obviously bulls would become more confident with it. Bears would become more confident in the fact that they failed here. They'd jump on just like I am, and then they would drive it lower. And that's the only way to increase the demand by bulls is to lower prices. And so that all makes sense. And again, at the same time period that you find resistance here, it makes sense. Previous support was here. You broke through that point over here, and you found resistance there. So all these things are confirming one another. There's no reason here to be bullish. Look at the longer term chart, we get confirmation of that. Here we are looking at the SPX, the S&P 500 Large Cap Index. This is a 2-year chart. Each candlestick represents a single month's worth of trading activity. We can see again confirmation of every chart shows the exact same thing for the month of May. There is no argument as to the actual candlestick formation here. It's a continuous signal to the downside. Whenever you see these situations, you should not be looking for a buy, especially being the fact that you have this high point here. You get the same signals that we talked about in the past. You do the hanging man candlestick formation, shooting star signal here. You sell off, you jump up here, same signal again, and you start to roll over. Is this higher series of highs and higher series of lows confirmed by the Ultimate Oscillator? No. You get the high point, highest close here and here trending up. You get the same ones here and here trending down. That tells us the same thing that we've already seen on the other charts. This move here was not true. It's unsustainable. It will be erased. That means we look for this to fall to at least this point here, and at that point we'll get to another analysis process. But right now we're looking for this to continue to move to the downside in the month ahead. Yes, you can have a day, 2, 3, 4, 5, whatever, to the upside within that month's candlestick formation. That's always a reality. No market falls straight down or goes straight up. So I would be expecting to find a day here and there to the upside, but the overall trend on the short-term chart clearly defines a move to the downside. That's confirmed by the the long-term charts on the all 4 of your major markets that I've just shown you, as well as the Ultimate Oscillators. So there's no reason here to buy whatsoever. If there was anything in this particular video that you did not understand as far as the technical aspects go, you can visit this free website at perfectstockalert.com and Chart School right here. And you click on that, you will find about 100 different technical analysis tutorial videos there, very short videos, and discussing all different aspects of technical analysis and how to do them properly, as well as how to use them. And you will also find our trade school section here showing different techniques for using the technical analysis for effective trading. You will also find on the end of our website here, let me move this over so you can see it, if you go to the end of the website you can find the forum, message forum, where a lot of smart investors and traders are at, asking questions of one another and getting help from one another. That's the main thing, is help one another out, learn and get better at what you do, and you will eventually find that there is one logic to the market, and that is trade it properly, trade with the trend and not against it. Right now, all the trend that we were looking at are clearly telling you you need to trade to the downside, or do not be looking for long opportunities. Thank you guys for your time. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. Remember, tomorrow I do my longer market video analysis where I go over all the major markets we track at perfectstockalert.com, so you guys will know everything I know moving into the week ahead. See y'all then. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.